Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thanks for having me.
It's been a volatile week in digital assets. The president he posted on Truth Social on Sunday about a strategic crypto reserve that would include Bitcoin, ETH, XRP, ADA, and Sol. But crucially, he tweeted or posted first about XRP, ADA, and Sol, and then later followed up with, of course, he said, obviously also Bitcoin and ETH. Anyway, that sent coin prices a lot higher, but by Monday, midday, they'd mostly retraced the entire move. And then now, all the way back down into the mid to low 80s for Bitcoin. But yet now we're in the high 80s. And let's just start there. I don't know. What was your reaction to that? We'll talk about macro too, which continues to be tricky.
Yeah, I have taken a pretty cautious stance on the strategic crypto reserve. I think there are some kind of moral hazards with purchasing something like Cardano, Ripple, and Solana with taxpayer money and Bitcoin and ETH as well. I think if you're a president that is actively trying to cut spending in the U.S. and you're cutting employees, it's really tough to go turn around and be like, I'm going to go buy this magic internet money that's already worth, tens of billions of dollars. And, it's just a really hard pill to swallow. And I think, if you even think about kind of some of the Republican states that have Bitcoin legislation, like it hasn't been an easy path to pass, strategic Bitcoin reserves on a local and state level. And so, the idea of doing it on a federal level and expanding the scope beyond Bitcoin, I think is going to have a lot of pushback from basically all sides. And so, I think that's kind of why you got the quick reversal. It's also worth keeping in mind that Sunday liquidity is pretty thin. And, the Truth Social headline dropped in a very illiquid period. And so that's kind of why you had some of these outsized moves, Cardano being up 75% on a weekend. Like, I don't think you would have had the same magnitude of a move if it was, Monday at 10 a.m., for example.
Right.
And so, that's partially explains the reversal you've had. And the other thing to keep in mind in terms of why we've bounced since the fading of the weekend move is you do have the crypto summit, on Friday, and there are meaningful expectations, going into that meeting. But high level, I think what the market really needs is something more than words. Like, you need action, like signing a piece of paper or putting out a Truth Social post is not going to be enough to take crypto, meaningfully higher. I think you actually need to see either legislation passed by Congress or, like, even after that, like, you need to see dollars actually enter the crypto market in order to get that meaningful rally. And so, I think right now there's a lot of conjecture and the market's ready for action.
Yeah, it was. I agree. The low liquidity, and I will talk a little bit about the summit, a little bit more about it. I think is interesting. This podcast obviously will come out on Thursday, March 6th. The summit will be on Friday, March 7th. We're recording on Wednesday, March 5th. But just looking at those assets that were mentioned in the Truth Social post, Cardano and XRP are still. Everything basically by end of day on Monday had retraced the full move, but Cardano and XRP are trading higher from pre-Truth Social post. Sol, Bitcoin, Sol and ETH are basically trading flat as if it never happened at this moment as we record at 10:30 a.m. Eastern on Wednesday. Bitcoin's slightly higher than where it was, but basically, to me, this says something like, look, Bitcoin, ETH, and Sol are all, whether Bitcoin's slightly higher, they're basically flat. Bitcoin's slightly higher at the moment, but these are the actual liquid ones, much more liquid than XRP and Cardano. So it screams a liquidity story to me.
Yeah, no, I mean, there definitely is a little bit of a liquidity story to it, and kind of like, institutional ownership base versus like a retail ownership based dynamic as well. I think if you look at kind of the average balances of folks that hold Cardano and Ripple, I do think they tend to be smaller than the majors, and so there's a bit of a dynamic there in terms of an ownership base. But the other most notable dynamic, though, is the relationship with broader risk markets, right? And equities in the U.S. have been trading super heavy. You're kind of at those deep seek low kind of trading levels at the moment. And you're threatening big support levels like the 200-day moving average on S&P. And you've also and that's been driven by kind of a broader slowdown in the U.S. economy, which we touched on during the last podcast. But that's a trend that no market can really ignore, particularly a risk asset like crypto.
Yeah, are we in a risk-off environment just generally right now, would you say?
I would say that for sure. If you take a step back, though, I do think you're kind of still in the early innings of it. Like the S&P, I think year to date is only off like 125 basis points, right? And if you read fin Twitter, like it would seem like the world is burning, but you really haven't moved that much. And if you take a step back and look at the 5-10 year charts of basically any equity index, you're still at very, very elevated levels. And so I think I'm not calling for like a meaningful downturn, but another 5% in equity markets does not seem crazy to me.
Yeah, and it does feel. I was going to say there was new data, right? We had the ADP data, which came in soft, which is employment data, which jives with what you and we have been expecting, which is theoretically rising unemployment. Makes
Yeah.
sense when you fire tons of people from the world's
No,
biggest
no.
employer, which is the
Yep.
U.S. government, right?
Yeah.
Uh,
So I think one, some of those firings have still yet to hit the data. And so for example, when you look at uh, you know uh, folks filing for initial like unemployment benefits and initial jobless claims in DC and Virginia, though they haven't really ticked up quite yet in a way that you'd like to see or are expecting to see. So I still think that you have that federal workforce kind of tailwind that's upcoming. But you're spot on. ADP came in the mid 70,000s versus expectations of 140,000. That's a reasonably reliable data point. The big jobs print is obviously going to be non-farm payrolls on Friday, and that should give you a better reading of kind of what the labor force, what's happening with the labor force.
and let's step back and think about the administration's policy a little bit because it's Wednesday, March 5th, but yesterday, Tuesday night, March 4th, President Trump gave an address before a joint session of Congress. Not technically a State of the Union address, but he did lay out a lot. And Treasury Secretary Scott Bessent has also made clear. He said that they want lower rates. He said, he and Commerce Secretary Howard Lutnick have been very vocal and supportive of the tariff policy and strategy, I should even say. It almost seems to me like they know, and like that near term pain is the strategy here, right? And in order to get down rates, get people into the longer end of the treasury curve, right? Is that sort of like what it looks like to you?
It's quite possible. And I do think Scott Bessent and Howard Lutnick are kind of smart enough to kind of have a strategy like that. And so it's definitely a believable thesis. But you know, if you're if I was the president right now and I was thinking about the future of America 5, 10, 15 years out, like my first objective would be to get the fiscal situation corrected. And I think that's exactly what they're doing. They're cutting spending, cutting employment. They are, selling properties, as you saw. I don't know if you saw they're selling 440 some odd commercial buildings. There's talk about monetizing the gold balances, things of that nature. And so they are actively trying to address the government's balance sheet. And one of the best ways to address the government balance sheet is to reduce the cost of borrowing. And so, yes, it's an entirely plausible thesis, and it probably would be exactly what I would do if I was, trying to govern well for the long run.
Yeah, interesting. Well, let's leave it there this week. It continues to be very interesting. There is this, after this show will have been published, there is this summit at the White House. They're calling it the first crypto summit, involving some key executives from the crypto industry. Obviously, urge our listeners to follow that. There could be news emanating from that or something that could affect markets. Of course, though, we will cover whatever it is that will happen in that next week when we see you back here, Beimnet, my friend. Thank you so much.
Thanks for having me.